A $1.6 billion government deal just hit the rare earth sector. Stocks gapped up in pre-market. Investors, including myself, celebrated on the news. Then, the market basically did what it did the best. It slapped my face hard and bled out after the open. So what went wrong? Look, if you're short on time, or you'd rather not listen to some random cat on the internet ramble for 10 minutes, the headline said 10% stake for $1.6 billion. What they didn't scream at you was that it's a non-binding letter of intent. It includes discounted shares, warrants priced below market, and a $1.3 billion loan, not just equity. Dilution is coming. That's why smart money sold into the strength. That's the takeaway. You can leave now if you want, no hard feelings. But if you want to actually understand how this sector works, why these stocks move together like a synchronized swim team, which names are worth watching, and more importantly, why I'm still bullish after this sell-off. Yeah, stick around. I promise I'll keep it tight. Oh, and hey, for those who are new here, this is DataCat, former corporate slave. Spent years as a very average analyst inside a Fortune 50 company, crunching numbers, building models, sitting in meetings that could have been one Slack message. You know the drill. I'm still figuring this whole YouTube thing out for the past 6 months. Honestly, I'm not here to pretend I've got some secret formula or sell you a course. I'm just a guy who couldn't survive a corporate grind and be a good salesman. A guy who simply likes digging into data, explaining what I find, then hope for the best that I won't end up homeless. So thank you for being here. Seriously. Now let's get into it. Alright, Monday morning. The headline drops saying that Trump administration to acquire stake in USA Rare Earth for $1.6 billion. Pre-market euphoria. USA Rare Earth gaps up hard along with its peers. The Rare Earth ETF also moves. Everything's green, and then the market opens, and it's like someone flipped a switch. The whole group just fades like hard. Now, if you were watching this happen in real time, you might have felt like something was off. Like, wait, didn't we just get massively bullish news? Why is everything selling? Well, let's try to make sense out of it. That headline, $1.6 billion stake, it sounds like the US government just wrote a massive check to buy shares at market price. A full endorsement, a stamp of approval. Except, that's not what happened. Let me break down what the deal actually is. First, it's a non-binding letter of intent with the Department of Commerce. Non-binding. That means it's not finalized. It's a handshake, not a contract. Second, the $1.6 billion isn't just equity. It's a funding package. $277 million in federal funding, plus a $1.3 billion senior secured loan under the CHIPS program framework. Third, the government's equity piece, about 10% ownership, but it's coming via shares and warrants priced at $17.17 per share. And so, when the stock was ripping in pre-market, it was trading well above that level. So the government is getting shares at a discount. That's dilution. That's supply hitting the market at a lower price than where retail was buying. And fourth, alongside this, USA Rare Earth also announced a private placement, a PIPE, at $21.50 per share. More shares, more dilution. And now arbitrage traders have an anchor price to work with. So when you add it all up, yes, it's strategically bullish. The government is continuing to signal they want domestic rare earth production. That's real. That matters long term. But in the short term, you've got discounted shares, warrants, a loan that needs to be serviced, and a PIPE that increases supply. That's not a buy at any price setup. That's a read the fine print setup. And Wall Street read the fine print faster than we average folks did. This brings us to why pre-market looked so bullish, and then reality hit at 9:30. Pre-market trading is thin, liquidity is low, fewer participants are active, market orders move price more. And most importantly, people trade the headline before they read the structure. So you get this gap up that looks like conviction, but is really just reaction. It's not durable. It's emotion meeting a vacuum of liquidity. Then the bell rings. Full liquidity arrives. And what happens? Early longs who've been holding for months finally get a chance to exit into strength. Short-term traders take profits. Funds rebalance. Everyone who wanted to sell has a buyer for the first time in weeks. That's not manipulation. That's just how markets work. Big Catalyst Day is also a liquidity event. Like when you finally open the door and the cat bolts, they were just waiting for the opportunity. Now, you might have noticed it wasn't just USA Rare Earth that faded. MP Materials did. Critical Metals Corp did. XME and REMX, the Rare Earth ETF, did. Even names that aren't pure rare earth plays moved in lockstep. Why? Because a lot of modern trading isn't single stock fundamental investing. It's baskets, it's ETF arbitrage, it's systematic momentum strategies, it's retail sympathy buying across anything that screens as rare earth or critical minerals. When the narrative is hot, money flows into the whole basket. When the trade flips, profit-taking, momentum break, whatever, those same baskets unwind together. Same timing, same magnitude. It looks coordinated because everyone is responding to the same signal. Oh, and let's not forget, around this same period, you had geopolitical noise around Greenland, tariff threats, government shutdown, basically more risk-off behavior in the broader market. And amongst them, geopolitical tension is a double-edged sword for these stocks. On one hand, it supports the strategic narrative. We need domestic supply chains. We can't depend on China. Rare earths are a national security issue. That's bullish for the theme. But on the other hand, elevated uncertainty can trigger risk-off flows. And high beta small and mid-cap miners tend to get hit hardest when investors move to safety. So you can absolutely have a bullish thematic headline land during a tape that rewards de-risking and profit-taking. That's exactly what produces the gap-up hard fade pattern we saw. Alright. But to be honest, a one-day move doesn't eliminate what I believe in the entire sector. And we are not here to just learn about the market mechanics. We are here to follow the money trail. But first, let's talk about who's who in this space, because not all rare earth stocks are the same. Now, the rare earth value chain looks like this. 1. Mining and concentrating. You dig the ore, you make a concentrate. 2. Separation and refining. You take that concentrate and separate individual rare earth elements into oxides. 3. Metal and alloy production. You turn those oxides into metals. Things like neodymium, praseodymium alloy. 4. Magnet manufacturing. You make the actual permanent magnets, neodymium iron boron magnets, the stuff that goes into EV motors, wind turbines, defense systems, robotics. 5. End markets. The actual applications. Also worth knowing, rare earths are 17 elements total, but they split economically into light rare earths like neodymium and praseodymium and heavy rare earths like dysprosium, terbium, and whatever this is. I don't want to look up the dictionary to learn its pronunciation. Just know that heavy rare earths are often the bottleneck for high temperature magnets, and they're much harder to source outside China. So first, let's talk about MP Materials, ticker MP. This is the most operationally real company in the US rare earth space today. They operate the Mountain Pass mine in California, the only scaled rare earth production facility in the country. Their focus is neodymium praseodymium, which is the core input for permanent magnets. But the equity story isn't just we're a mine, it's we're building out the entire downstream chain. That includes separation, metals, magnets, fully integrated, mine to magnet, all in the US. They've got government partnership backing, they're producing at scale, and they're trying to become a vertically integrated magnetics platform. If you want exposure to the US rare earth theme with the lowest execution risk, this is probably still the first name people look at. It's also the largest by market cap, which means it's more liquid, but also more efficiently priced. Less lottery ticket, more blue chip for the sector. Then we got USA Rare Earth, ticker USAR. This is the company at the center of Monday's headline. They're a developer, not a producer yet, trying to build a domestic mine-to-magnet supply chain. Upstream, they've got the Round Top deposit in West Texas. This one's interesting because it's marketed as hosting 15 of the 17 rare earth elements, including all the heavy rare earths plus other critical minerals. Downstream, they are planning magnet manufacturing in Stillwater, Oklahoma, with R&D work in Colorado. The edge here is heavy rare earth exposure plus an explicit focus on magnet manufacturing capacity in the US. The risk is execution. They're earlier stage than MP, so you've got capex risk, permitting risk, timeline risk. The government deal, if it closes, would de-risk some of that. But remember, if it closes, is doing a lot of work in that sentence. Next, we have Critical Metals Corp, ticker CRML. This one's a bit different. It's a mining development company with two main tracks, rare earths through their Tanbreez project in southern Greenland, and lithium through the Wolfsburg project in Austria. So you're getting asset optionality here, not a single commodity pure play. And you're getting the non-China geography narrative, which is strategically appealing. But here's the catch. This is the least US rare earth miner of the group in a literal sense. The core assets are outside the United States, so it trades more on geopolitical headlines, permitting milestones and macro sentiment than on near-term operating metrics. If you're betting on the Western supply chain build-out broadly, not just the US specifically, this might be interesting. But it's more of a speculative development play than an operational story. Also, with Greenland in the news lately for other reasons, This name can get volatile on headlines that have nothing to do with the company's actual progress. Just something to keep in mind. Last, a slightly different candidate, the United States antimony, ticker UAMY. Okay, this one catches people off guard because it's not actually a rare earth company, it's antimony and zeolite. They've got processing facilities in Montana and Mexico for antimony, plus a zeolite operation in Idaho. Why does it trade with the rare earth group sometimes? Because antimony is also a critical mineral with national security implications, and it rides similar supply chain themes. Plus, when retail gets excited about critical minerals, they tend to buy anything that sounds related. The edge here is that they have actual midstream processing and smelting capacity in North America. That's actually rare. Most critical mineral processing happens overseas. But again, this is not a rare earth story, it's not a magnet story, it's a critical mineral processing story. Different thesis, different catalysts. Don't buy it thinking you're getting rare earth exposure. Alright, let's bring it home. The $1.6 billion headline was real. The government is signaling support for domestic rare earth production. That's strategically meaningful. It's definitely not nothing. If you're looking at this sector, here's what I'd suggest. Understand where each company sits in the value chain. Mining is different from refining, is different from magnet manufacturing. Understand the difference between light and heavy rare earths. Not all deposits are equal. Understand the difference between a producing company and a development stage company. Execution risk matters, and understand that headlines are not the same as fundamentals. Sometimes the best trade is to wait for the dust to settle. Most important of all, if you've made it this far, understand that the rare earth theme isn't going away. Electrification, defense, robotics, all of that needs permanent magnets, and permanent magnets need rare earths. The structural demand story is intact, but timing matters, and reading the fine print matters more. That's going to do it for today. If this helped you understand what actually happened on Monday, and maybe saved you from chasing a headline into a fade, consider hitting that like button. It helps the algorithm figure out that this stuff is worth showing to people. And if you want more breakdowns like this, no courses, no hype, just data and context, subscribe. I put these out regularly, and I'm told the algorithm likes consistency almost as much as cats like knocking things off tables. It's just sometimes I don't want to pretend I know everything and promote garbage content daily just for the sake of pleasing the algorithm. Anyway, thanks for watching. DataCat out, and I'll see you in the next one.